In this video, I want to give you an update to our Amazon trade. If you remember, we had constructed a trade on Amazon. This was the chart that I left you with, and we were expecting a target of around 780 to 790, I believe, from memory. So let me just draw a circle there. So somewhere around this level, we were expecting some sort of a target. And the way that we had constructed a trade, we needed Amazon to just stay above a certain level. We had sold some put options and we had purchased some put options for protection. So if I open up the actual options trade that we were looking at, we sold the 775. No, we didn't sell the 775. I think it was a different one. We looked at this, but that wasn't the one that we actually put on. So let me get the right one up. I remember that the one that I went with was a credit of 870 and it had a risk of 1630. So it wasn't that one. Let's see. I think it was this one here. We sold the 772.5 put and we bought the 770 put. Yeah, so that's the one. We received a credit for this particular trade, so you need to watch my previous video to understand how we constructed this, why we constructed this. Now, let me just zoom into the risk graph there so we can talk a bit about what our management plan was for the trade. You always need to have a management plan so that you know exactly how you're going to play this trade out. No point trying to guess when all those emotions are flying high if the stock is not doing what you're expecting it to do. And then you're trying to work out exactly how you're going to manage your risk. All of that thinking needs to happen up front before you even place the trade. All that analysis needs to happen up front. So here's our trade. We had a break-even point of 771.63. Okay, so what that means on the chart is we needed the stock to stay above 771. Okay, so let me just see if I can mark here on the chart. Where's 771? 771. So right here. So it's at a fairly key support level as well. Now we looked at a couple of these. So just go back in the original video to understand the different types of trades that we analyzed. But the one that I went with was the one that you're looking at now, where the stock, Amazon in this case, needed to stay above 771 just for the next couple of days for me to keep this credit that I had received for this trade, which was $870. Okay, now we were going to manage this trade such that if the stock came down to a certain level, we were going to have a stop loss in place so that we weren't going to wait until all of this potential maximum risk was at loss before we close the trade. Our management plan from memory was that we would manage this trade until we would incur a loss of around about $435, which is 50% of that entry price. So from memory, if we were to move our on this chart here, we worked out that stock, if it came down to around under that 770, then we would look to exit. Okay, so that was our management plan. We were going to hold this particular position open as the stock moved up. Okay, you can see the profit is to the right hand side. Okay, so profits mentioned here to the right hand side and stock price is on the left hand side. So if the stock moves up, the profit is all on this right hand side. So even if this blue line here, which indicates the current price of the stock on this particular day, which is the day that we placed this trade, if the stock remained at its current level, then we would actually make money just by these options that we sold decaying over time, which is the objective of this particular trade. Okay, so options expiry is this black line here. So if the stock were to stay at 775.10 and time just went on, meaning the 4 days that I'm in this trade for over here continued to just, so as time moved on, even if the stock remained where it is right now, I would gradually, day by day, receive profit and over time get to my maximum profit, which is capped here. That's why this line is vertical. at $870, which is that credit that I had received for putting this trade on. Okay, now obviously the trade doesn't work out exactly how you want it to, and that's why we had a risk management plan in place. And my risk management plan was that if the stock moved down, I would close the trade if it went below 770, because I can see from the chart that that's a loss of around 50% of my entry credit. Okay, that's why I'm exiting the trade if it didn't work in my favor and it actually went the opposite and actually started to come down. Then I need a place on the chart where I say, okay, I need to cut my losses. And that place for me, for my risk management plan, is when the stock goes below 770. Okay. But the great thing about this was that so long as the stock remained above my break-even point, which is 771.63, as indicated above here on this chart, then I would potentially make a profit. So the stock didn't have to reach a particular target. It just had to stay above its current levels. Even if it went sideways, even if it came down a bit, I would still make a profit. So that's the beauty of this type of trade. So what I'm going to do is I'm going to now move to what the current date is. Okay, so this trade's now closed, and I'm just going to walk you through how this chart, how Amazon progressed during the week, to give you an update on where we are and how I closed the trade. Okay, so I did this with you live. I put this trade on last week or earlier in the week, live in front of you, and now I'm going to show you how I managed to trade. Okay, so we're going to move forward. And let's see. So the next day. Okay, so I've got my chart back. I'm not sure what happened there. But anyway, so we had a trend line where we established what the trend was. And we had a set expiry, which is the sort of timeline that I was working towards. And from all that, I worked and came up with a target of around, if we follow this trend line, we said, we had a couple of sort of aggressive, medium, and conservative targets. And I said, well, look, we're going to be somewhere around about this 780, 790. That was our target. But as I said, the trade was structured in a way that the stock just had to be above a certain level. And as I said, in this case, it was the stock had needed to remain above 771.63. Obviously, if the stock were to continue going higher, then that gives our trade a higher probability that we would keep this credit that we had actually established for being in this position. So I'm just going to step forward by 1 day on my platform to show you what Amazon did the next day. So you can see Amazon didn't do much that next day, it just creeped up to around 780. Now, if I move to my platform, I will also increase the trading day here, and just to see what did the actual stock do if we just go up by 1 day. Okay, so we'll just see as time goes by, how much does it impact our profit, even though the stock didn't really do much. So you can see just in 1 day, because these options decay so rapidly in that last 30 days, in this case, we've only got a couple of days left for these options to expire. We've made almost a 20% return on investment, which is a $310 cash profit, just with that small little move in Amazon. Okay, it just went from 775 to 780. It's peanuts for a stock of this price. Okay, so I'm going to just widen this chart a bit, just so that these bars aren't too close together. And I'm going to move the trade up by 1 more day. Okay, now you can see on 2 days of trading. Now let me also just change the color of this circle, because it's going to be hiding that bar that we have, the trading day bar. So I'll just change the color we're using here so you can actually see where the stock is, and I'll actually save that as well so that the color is the same. So you can see just after 2 days of trading, we've actually hit our target. And not that our target's actually important because of the way that we've constructed our trade. Our trade simply has to be above 771, okay, for this trade to be in profit. Now, clearly, it's sort of been moving to the upside, which has benefited our trade, but we had no reason to have Amazon go to a specific target. Now, it's closed on this day, which is 2 days after we had entered the position at 789.74. So let's move the position by 1 day again. Okay, let's see what it does to our profit here. And this is something important that I want to talk about. So right now, we're at $770 in profit. And that is a return on investment of 47%, okay? Our maximum profit that we can achieve is $870, okay? Now, we've got 2 days left in the trade, right? So this is this kind of decision-making that you need to make as a trader. If you get to this sort of state and you have a position like this, what you need to think about is, well, I'm only going to make another $100 in profit, but I've got an open profit of $770. Now, all of this profit is at risk, okay? It's at risk until you actually close the position. You would close the position by buying back whatever you sold and selling whatever you've bought. So you do the opposite to close the position, okay? Now, the reason that I say that you need to think about this as a trader is because at any point in time, the stock right now could crumble, right? There's nothing to stop Amazon turning around and going back down to where it started from, back down to 760. If that were to happen, then if you look at your chart, right, the risk graph tells you the story. Okay, let me zoom in and show you. Let's just zoom in to, let's say, 750 to 800. I'm going to zoom into the right price range on the stock chart here on this platform so that we can see what the impact to our position will be. Okay, it allows us to then forecast, manage our risk. So, as I said, what happens if the stock turns around from where it is right now all the way back down to 760? I mean, it took only 2 days to get to where we are, from 775 all the way up to 790. Nothing, there's nothing strange about it turning around and going the other way by 15 to 20 points, okay? So, if the stock all of a sudden, here it is up here, this blue line indicates the current position of where the stock is, okay? If all of a sudden it went from 790 all the way down to 760, well, look at your potential loss. Depending on how quick or how late in the next couple of days it did that, your loss is going to be anywhere between $1,000 and $1,500. So what does that mean? That means you're risking almost $1,000 just to make another $100, okay? So you can't be greedy. You need to manage your trades, okay? If you are not a professional trader or not an advanced trader or haven't had a lot of experience with options, then when you're at this sort of position, you want to think about taking your position off and protecting these profits, okay? Someone like me who understands the market and can make adjustments and understands how I can make various adjustments quite quickly, I could hold on to this position, potentially, and then look to make an adjustment if I had to, okay? But even I would consider very seriously to take this position off. Now, in my case, I don't watch the market every single day. Okay, I'll put a position on and I'll let the market do what it's going to do, and I'll come back generally 3 or 4 days after. In this case, the trade was only a 4-day trade. So let's continue and see what happened next. Okay, we're going to move Amazon by 1 more day. You can see it's now at $804. Okay, so it's actually broken this $800 mark. Now, it's quite surprising because this $800 mark, these multiples of 100 usually act as a resistance. But I remember that in the last couple of days, the NASDAQ, which is what Amazon belongs to, was very, very strong. And actually, the S&P 500s were very weak, okay? But they actually caught up anyway. So it was very strong for Amazon. It was actually a very good pick to pick this particular position. So let's now move to this date on our trading platform and see what we actually ended up with. We'll just move up the calendar and you can see now we're at maximum profit. Okay, we're at 800, was 880, but that's just a little glitch here in the platform. So on this particular day, you would basically go in and you would buy back what you've sold and you would sell what you originally bought. Okay, now you can see here the price. So you could basically buy this back for roughly $5. Okay, so you'd pay $50 to get out of that position. Originally, this brought you in $520. So you'd give back $50 to the market to get out. And then you would sell this one. You could also sell this for roughly $5. And you would take back in $50, okay, into your account by selling these options. So you basically do the opposite to close your position. And that would basically net. I think I closed this out for around about the same, and I think I basically exited my position with my brokerage fees of around about $810, okay? And the position was closed. So that was not bad, bit over 50% return on investment in just 4 days. Well, 3 days, in fact, in our case. We still had a days of trading left. Now, why didn't I wait for today's trading? Today's Friday. I'm already out on this position. I've got one more day of trading before these options expire. Why didn't I wait for today's trading and left this position on? Well, there's no need to, right? I'm not going to wait to get another $5 and risk all of my open profits. Okay, the stock Amazon is at a very key resistance level. It's at a $800 mark. It's just gone from $775 all the way to $800 in the last couple of days. 3 very strong up days. If I looked at volume here, let me see if I can get volume up here. You can see volume has been fairly strong in that last couple of days. Now, I don't want to hold on to my position and all of a sudden everybody else starts to get out of their positions and you start to see a move down, a little pullback back down towards a trend line, okay? These stocks generally move back down towards a trend line before they bounce up again. So you want to protect any open profits. You always want to manage your trade. Don't be too greedy. There was no reason for me to hold on to this after last night's trading, and therefore I closed my position and took in a very nice $800 profit in just a few days, which was a return on investment of over 50%. Okay, the return on investment is worked out by looking at your maximum risk and then creating a ratio between how much credit you received for that particular trade. Now, that's actually return on your investment, but sometimes I look at this a little differently. I had already analyzed and said the way that I'm going to manage this trade is that I'm going to exit this position if it went below 770, and I worked out on the chart in front of you that would mean a loss of around about $450 or $435. So my actual risk in this, my theoretical maximum risk is $1,630, but my risk that I'm managing to is $435. So I try to compare it to the risk that I'm managing the trade to. Okay, so I'm putting up $1,630. Yes, that's my margin, as you might like to say. But my theoretical or my management risk in the trade is around $435. So with a risk of $435, I've actually produced a dollar value, a profit of $870. Okay, so in my view, I've returned a 100% return on my risk, okay, where in this case it's a 50% return on investment. Okay, so just a few different ways to look at it. Now, I also want to talk about in this video another trade that I looked at, which is also a NASDAQ stock, and I didn't really have enough time to post it. It's Deckers Outdoor, and I looked at this on the 20th of September, which I think was Wednesday. Okay, Wednesday or Tuesday. And here's what I liked about this trade. This is why I want to talk to you about it, because I love this pattern. When you see this sort of a pattern, it's a very, very positive pattern where you see the stock moves up, has a strong rally, and then you see the stock make a little pullback, as you can see in the last couple of weeks between August and September. So it's made a bit of a pullback, okay? Now, you can measure what this pullback is. as a move, as a percentage of its original move up. So if we look at this original move, let's just draw a line here. So move from, let's say it's 48. This original move was from 48 to around 68, okay? 48 to 68. So that's a move of around 20 points, okay? Let's write that here somewhere. That's a 20-point move. Let's write that down so we don't forget. It's the $20 move from, and let's also just write down this point here. From this point, let's call it A, okay, up to this point. Let's just call it B. So this move between A and B is 48 up to 68, which is a $20 move. Now the stock has come down. Let's just say that's 58. These numbers are actually nice and easy to work with. 58. So from 68 down to 58. Let's call this point C. That's a $10 move down, right? This is 68 up here. And down here, let's just say that's 58, okay? Because there's 56, there's 60, so I'm just assuming that's around 58. So that's a $10 move back down. So this has had a 50% pullback. Okay, so it's moved back down 50% of its original move. Okay, very, very important lesson this, because this is one of my very, very key lessons that I talk about to my mentoring students that actually teach how to do this sort of stuff. Now, I've got to tell you, there's a magic number that I like. Okay, it's not 50%. So this number here, let's just write this down. So this is had. This right here is a 50% pullback, okay? So remember what that means. That means that the stock has retraced, okay, this original move back down by 50%. 50% because this move down is $10 from 68 to 58. And that $10 is half of this original move up from A to B, which was a $20 move, okay? That's why it's a 50% pullback. Now, let me tell you, there's a very, very specific pullback level that I look for that, from my own experience, has a greater than 70% probability of success of the stock moving back toward the upside, okay? It's between 50% and 70%. There's actually a number that I'm not going to reveal in this video. It's a number, it's a percentage, a pullback that I only reveal to my mentoring students, okay? It's like a bit of a secret, my secret formula. So that's why I'm a little bit protective of it. And it has a very high probability of success that when the pullback is in line with that specific number that I look for, that the stock continues to go higher, okay? Now, in this case, the reason why I want to talk to you about this particular position is because I did place a trade on this position, okay? But I want to talk to you about what my prognosis was and the actual trade that I did. Now, notice how this pullback, okay, is right at this red line. This red line, it says it here, is a 200-day moving average, okay? It's an average price of the last 200 days. That's how this red line is drawn. And this yellow line is a average of the last 50 days trading. So each time there's a bar here, it calculates and it draws it as a line, the last 50-day moving average, okay? They're important numbers. Now notice that the stock sort of came back close to this 200-day moving average, which would be a very specific, very significant support level, and it sort of bounced back up, okay? Now normally, I would, if this sort of was pulling back, if there was a bit of a greater pullback, I'd be a bit more excited, maybe a bit closer to this 200-day moving average, and then I would look for a move back to the upside. Now, it's already started to move up, and I like that as well. I usually wait for a specific pullback level, and then I like to wait for the stock to start moving back towards the upside, as it's done in this case, which is why I started to look at this particular stock. My only issue here was that it had resistance, okay? This 50-day moving average actually acts as resistance for this stock on its way back up. up. So what I would actually expect this stock to do is most likely continue moving to the upside, hit this level around about the 64 level, and then come back down and retest this 56 level, even go a little bit further to where I'm saying the pullback is, that magical level between 50 and 70. There's a specific number that I look for, and then it would go back up and reach new highs past this 68. That's what my prognosis would be. However, because I liked this pattern and I thought, well, because there's a resistance level up here at that 64 level, up around where this yellow line would be in the future, this stock would most likely continue moving up and actually be attracted to move up to this 50-day moving average. So I looked at my platform and I put together a trade, and I want to talk to you about it. That's what I'm going to show you now. I'm going to move over to DECK, D-E-C-K. Now, I'm going to show you the trade in a moment. I'm not going to talk much about the construction of the trade because it's quite complex. I'll show you it now. I mean, I'm not here to hide it in any way, but you can see I've bought lots of different types of options. I've sold lots of different types of options. I've done all sorts of things. And the reason I've done that is because I needed to construct a specific type of risk graph. That was my objective. Now you can see here that I'm receiving a credit of around about $1,000. I'm only risking just a bit over $900. That's my risk tolerance level. I like to invest somewhere between $1,000 and $1,500 per position. Okay, my account size is such that that's the amount that I'm allowed to risk by my own tolerance levels. Okay, now remember, we're aiming for the stock to go back up around that 64 level. Okay, so on my risk graph, let's move up here. Where's 64? 64 is around about here. I'm just trying to put my mouse on there. You can see at 64, I've still got to move down a bit. At 64, my expected profit is around $500. It depends how long it takes, how quickly it's going to move, whether it's going to move the next couple of days or in 1 day or maybe in a week's time. There's going to be a bit of time decay in these options. So it's going to depend on how quickly or how slowly it actually moves up to that level, or if it actually moves up there at all. Okay, you can see this is quite different to the Amazon trade. Here's the current price of the stock indicated by this blue line. If I go back to the Amazon trade, which we've actually fast forwarded, so let me go back to the original entry, which was on the 19th. Okay, let's go back to the 19th, and I'll also just zoom into this trade. Remember, we're looking at the Amazon here. I'll get back to DECK in a moment. And let me just zoom into the charts. Because I want you to know there's different types of options, trades that you can set up, and what it means for your stock, what the stock needs to do, and what's the impact of the stock depending on whether it moves or not. You can see here the current price of Amazon when I put this trade on was 775.10. Now that's indicated here by this blue line, and you can see as I get closer to expiry, my profit actually increases, right? Profit here is 0 at the start of the trade. Okay, moving to the right is towards expiry, this black line. You can see the stock hasn't moved, but my profit's actually moving up, okay, all the way. So at this point in time, okay, when I've got a couple of days left, I'm going to make a profit of $500 just by time going by. Okay, that was the nature of that particular trade. Those particular options, the way that I bought and sold those particular options, is why this graph is behaving in this manner. Okay, in this particular trade, I'm benefiting just by time moving on, okay, which is actually an inevitable occurrence. Time is going to move on, okay, the next day is going to occur. Now, in contrast to this particular trade, okay, you can see here's that blue line indicated by the current price of the stock, 61.63 on this particular day, and this time, as the as time's moving on, if the stock doesn't move, I'm actually losing money. Okay, if the stock doesn't move and we're at options expiry, okay, which occurs in, I think this was a 15-day trade, 10-day trade. So I'm using a specific option that expire on the 30th of September. Okay, I entered this trade on the 20th of September. So here, if the stock stays where it is and time goes on, well, then at options expiry, I'm going to lose a couple of $100, right? So that's the difference, right? This trade is directional, it has to move up. Whereas the Amazon trade, the stock didn't have to move up. It just had to stay where it is or slightly move up, okay? Or slightly come down even. But there was a break-even point of 771. Okay, in this case, the stock actually has to move up, right? It has to move up. For me to break even, the stock has to move up to at least 62.56 from its current level of 61.63, okay, at options expiry. Now, I've got a prognosis where I believe the stock will continue moving up and it is attracted to this 50-day moving average, which in the next couple of days will be around this $64 mark. So I've constructed a particular trade that at $64, which is somewhere around about here, I'm going to make somewhere around about $500, okay? Now, obviously, I could make more money if the stock continues to go higher, but I don't believe it's going to go past that 50-day moving average, which is marked on the stock chart by this yellow line. I believe there's going to be some resistance there. Even if there isn't resistance there, we don't have much time anyway. I don't believe it's going to be a very strong moving stock with that level of resistance. Now, I could be wrong. It could actually skyrocket. Okay, which is why I've positioned this trade so that if it does continue to move up, I continue to make profit. Okay, as time goes on, if it continues to move up, I'll continue to make profit, but I've only got 10 days remaining until these options expire. Now, like I say, I always need to manage risk. We always, as a trader, need to manage our risk. So, what happens if I'm wrong? What happens if I'm wrong? And right now, tomorrow, this stock actually comes back down, okay? Back towards its 200-day moving average, okay? Well, I need to have a place on the chart where I say, look, that's enough. I want to cut my losses because as you can see, okay, look at the stock price. Here's the current price of the stock. If the stock goes down, look what's happening to the profit. It's becoming negative. It's becoming negative until I can lose all of my investment, which is at $925. Okay, it's marked here on this particular platform. My maximum risk is $925, and my maximum profit is $1,075. Okay, so I'm willing to lose about $500 on this trade. So where is that on the chart? I need to work that out. Well, if I keep going down, where can the stock go down to before I'm going to lose around $500? Well, we can see somewhere around just under this $60 mark. Now, that's very, very important. These levels did not just come up. I constructed this trade. I bought these options and sold these options specifically, okay? I didn't just pull them out of my hat, okay? I specifically spent about an hour putting this trade together, trying different options, buying different things, selling different things, trying different expiries to come up with the right risk graph that I needed. I needed a risk graph that makes me a set amount of profit that I wanted at 64, if the stock was at 64, okay? And I also wanted the stock, so the position, to lose no more than a certain amount when it gets just below $60 on the stock price. Now, why did I choose 60? Well, I've mentioned this before, okay? I chose 60 because 60 on this chart was previous resistance and is therefore now current support. So if it breaks 60, then I know that the current level of support is broken, and 60, just under 60, is a good level as a protective stop to say to myself, well, look, if it breaks 60, then there's going to be further weakness in this particular stock, so I should just get out of my position. Okay, it's not going the way that I thought it was going to go. So that's why I constructed this specific position such that if it gets to 64, I'll make a bit of money. And if I'm wrong, I need to place on the chart to say, where am I wrong? Where is on the chart a technical level that clearly suggests that, look, you're wrong, it's going to go lower? And that for me is 60, because 60 is a key level of support. And that's also why I chose these specific options, because at 60, I'm going to lose around about that $500, which is my loss tolerance level that I've set for myself. Okay, so I'm going to now move forward in this trade. Okay, and let's see how it's played out. Okay, because this was back on when I put this trade on, which was on the 20th of September, earlier in this week. Okay, so let's move forward. Now you can see the stock moved up. It's a nice strong move up, okay, heading towards the 64. So let's move the position up by 1 as well. Okay, and just before I do that, another thing I want to show you here is that it took me about an hour to get this right, but let's move down. Remember, I always talk about two things. Where does my position break even, which is here, and where does my position, how much does the stock have to move for me to make a 100% return on investment? And I generally can create trades that allow me to make a 100% return on investment with small little 10% moves in the underlying stock. Now, in this case, I was able to generate a potential 100% return on investment with a very, very small 3.5% movement in the underlying stock, which is right at that level, just under that $64 mark. Okay, which is exactly where I'm expecting this stock to sort of land. Okay, so trading is an art, right? The more you practice, the more you'll get to be able to tweak your positions to meet your criteria. Look at the way that I've tweaked this position. I've gone specifically and looked at a whole range of options and constructed this particular trade in line with my exact prognosis. Okay, I've spent no more than $1,000, which is my risk tolerance level. I've looked at the chart and I've said to myself, the stock's going to go to 64. Okay, which is a level that I'm comfortable with as a profit. I've looked at the charts and I've said, if the stock goes below 60, well, then the stock's in trouble. Okay, and therefore that loss, if the stock does go to that level, is in line with my risk tolerance. And I'm also working within my criteria where I'm saying that target of 64, well, I have to be able to double my money. And by looking at the platform, I can clearly see that double occurs before getting to that target of 64. And that is also less than my required 10% movement in the underlying stock. Okay, that's another one of my criteria. These are all criteria that I have set based on my experience as a winning trader. Now you can see a very small 3.5% movement in the underlying stock allows me to generate a return of 100%. Now that's just amazing. That's an amazing achievement to be able to get to a level that I can spend a little bit of time and construct positions like this that yield that type of return. That's the level that you need to get to, but you can only get to that level with education. Okay, you need to have the right knowledge and a mentor that knows exactly what he's talking about to teach you and guide you exactly on how to replicate, my system, so that you can also do the same. Okay, that's the objective. So as I said, let's move up a day. We've already done that here on the chart here. The stock's moved up. We're now at the 21st of September, so I'm going to move this position up also. And as I said, it doesn't have to move up by a lot to make a double. Okay, so that's a great position. So what I want to do here is just move up by 1 day, and we'll see how that impacts our profit or loss. Okay. Clearly, if the stock's moving to the upside, our position also benefits to the upside. Okay, so a nice return of just under 14% in just 1 day. Not much in terms of dollars, but certainly a great return when you compare that with the banks. Of course, none of this profit right now is locked in until we actually close the position. Okay, so let's move up again on the stock chart. And you can see, notice this bar. This is a very, very important lesson as well. Let me just zoom into this chart. Okay, this is very, very important. I want you to notice how the stock, look what it did. If you look at that, let me zoom in a bit more. Okay, look how it went straight up to that line and went straight back down. This little edge on this bar on the left hand side is the open of that particular trading day. It opened at 63.33. Okay, this little edge on the right hand side is the close of that particular day. Look what the open and close, how close they are. How tight was that trade? That stock closed at 63.25 and opened at 63.33, but it was a very nice range during the day. The low of that day, so this stock went as low as 62.82 and as high as 63.84, which is almost right at where that resistance level is, right? So you can clearly see, look at the difference between that bar and this bar. This bar is a very strong day. Opened low at 61.39 and closed high at 62.67, right? A clear strong day for this particular stock, where the next day, as soon as it hit that resistance, it's been knocked back down, right? That yellow line there, that 50-day moving average. Okay, so let's have a look at what this has done. Probably hasn't done too much to the position on the 22nd of November. Let's move up by one. Time is working in our favor as well, this particular trade. Okay, so you can see we've doubled our profit just in that 1 day of trading, right? And we've got a week left. Now, these are the things that when you're trading, you need to consider. Do you make an adjustment? Do we sell half of these to lock in some of that profit? Okay, they're also things that you should have in your trade management plan. Okay, my trade management plan was that I'm going to wait for the stock to get up to around that $64 mark. I think that was what I was looking for. So let's move up and continue to watch this and see what does the stock do next. So where are we? 22nd. And that's where we are right now. I didn't even realize that's actually the current trading day. Okay, what happens next is what's going to happen today in today's trading, right? We're right now in today's trading. So we've hit that 50-day moving average. So I'm going to look to close that position basically, because I'm at that target level of where I want my profit to be, around about that $500. So I'll be monitoring this and just making sure that as the stock sort of moves up back and retests this support, this resistance level of this 50-day moving average, then I'm going to look to exit that position, okay? And I'm going to try and get as close as to that $500 profit that I'm targeting, okay? So I just want to talk to you a little bit more about that position, not really on how I've constructed this, but how I analyze the charts and how I analyze this risk graph to come up with a trade that's in line with my prognosis, that met my profit levels, that met my risk levels, but more importantly, how I traded this particular opportunity based on some of these support and resistance lines. But again, this very, very important pattern, if I just crunch this up a bit, if you see a pattern like this, obviously it depends on the stock and what the sector's doing as well, but this is a great pattern where you see a bit of a nice rally and then a bit of a pullback. And specifically if there's a pullback near a very key support level and you see a bounce back towards, you know, the major trend, which is the upside, then you want to look for those types of opportunities. Of course, in this case, there's something in the way of this stock moving and continuing to the upside, and that is his 50-day moving average. Okay, this stock would be interesting if it would, you know, go past this 50-day moving average. then you could almost say that it's heading towards its previous highs, that previous level of resistance. Of course, nothing's guaranteed, so you always need to manage your risk, okay? So, as I always say, understand your risks, know that trading is risky, always only trade with capital that you can afford to lose, and always clearly identify your risks and manage your trades accordingly.